What do you predict will happen to Tesla stock this year? Many are expecting a significant improvement in Tesla's overall performance in 2023, so much so that star investor Cathie Wood is convinced that Tesla stock will double this year. You definitely would not want to miss this info. This once in a century is not an understatement. We have an incredible amount of fear in the market, and that actually is the best time to average into these markets, Cathie Wood said in an interview in December. According to Wood, used car pricing is now down 14% on a year-over-year basis, so inflation will come down, and innovation is going to be part of that equation. Wood also talked about the truly disruptive innovation platforms around which ARK has centered their research on. That includes gene sequencing, robotics, energy storage, artificial intelligence, and blockchain technology. Wood said that all of these are deflationary in nature. Good deflation, it should cause a boom in the products and services associated with innovation. So our confidence there is building. Wood continued to explain that they were actually right in terms of the inventory build and the commodity price decline. I think normally the market would have responded already. The market is waiting for the Fed, and we think the Fed's rhetoric will change first and then its actions will change. And we think that's all going to take place in 2023, said Wood. It can be noted that the Fed raised interest rates several times in the past year, which has greatly affected stocks in the market, not just Tesla. In terms of our strategies, we, during downturns, concentrate toward our highest conviction names. And so we have been doing that now for nearly 2 years, and history would suggest that that concentration strategy plays out very well in the subsequent rebounds. And we do think this rebound will be quite powerful, Wood shared. She also stated that 2022 has been the most challenging year of her career, which is to say that it was worse than 2008 to 2009, which is considered to be the most difficult year of many investors in their respective careers. That says a lot. 2022 has indeed been full of twists and turns, not only for Cathie Wood's ARK Invest, but also for Tesla, among others. Still, Wood claimed that even though it may indeed be a difficult year for all accounts, the energy business can be considered the only thing that worked. It's up almost 50%, and many people are asking us why we don't diversify into energy since it's working. Well, the reason for that is we think it will stop working, said Wood. If our forecast for electric vehicles and autonomous taxi platforms are correct, then oil demand could drop by roughly 30%, 3 million barrels a day during the next 5 to 10 years. And we believe that demand destruction has already started. When asked why she kept buying more Tesla shares during the dip, even if the prices have fallen further and the performance decline has worsened with interest rate points and price fluctuating, Wood kept her answer simple. Well, we believe that the leading indicator correctly is inflation, and it has peaked. The inflation rate has peaked, almost every measure of inflation has peaked, she said. Wood explained that most of those metrics peaked in March or June last year, considerably during the first or second quarter of 2022. According to Wood, that is typically a good thing for innovation. However, Wood thinks that the market is so skittish and has been so terrorized by the most rapid increase in interest rates ever. We have never seen an 18-fold increase in interest rates within 1 year. It has truly terrorized the market, and I think that the fear is palpable, Wood explained. Wood continued to say that according to the Bank of America's recent surveys of fund managers and advisors, the U.S. hasn't seen this amount of cash on the sidelines since 2006 or maybe even 2001. I do know also the same survey shows that the put-to-call ratio in the U.S. market, meaning those short relative to those long puts calls, is at 1.5 now, and it has not been that high since 2001, said Wood. I remember in late 20, early 21, we could do no wrong. Anything we said was gospel at the time, and I knew that that wasn't right. And at the time I remember saying, keep some powder dry. It is for these moments or averaging down throughout a period like this that one keeps the powder dry, Wood shared. She then said that last year seems to be the flip side of the late 90s. The late 90s was an irrational increase in tech stocks, appreciation in tech stocks, and it was incorrect. The technologies were not ready, and even if they were close to being ready, the costs were way too high, Wood said. On a brighter note, Wood said that there are 5 innovation platforms evolving at the same time in the U.S. today. This has never happened in history, and the seeds for all of them were planted during the 20 years that ended in the tech and telecom bubble. The tech and telecom bubble is the first time a lot of investors heard this concept of exponential growth, and they bought into the dream, but the problem was back then the technologies weren't ready, and if they were anywhere near ready, the costs were way too high, shared Wood. Wood further explained that we didn't get the cloud until 2026 with AWS, and that we didn't get the big breakthroughs in artificial intelligence with deep learning until 2012. In terms of DNA sequencing, when the first whole human genome was sequenced one person's genome back in 2003, it had taken $2.7 billion and 13 years of computing power to sequence that one genome. Even if the cost had collapsed the next year by 75%, it would still have been too expensive. In light of that, we have gone from $2.7 billion for one person's genome back then to $500 today and a few hours of computing power. In fact, two companies, Illumina and Ultima, claim that it is quite possible for it to be $100 or $200 by next year. So we believe we are ready for prime time now, the technologies are ready and the costs are low enough. That's critical, says Wood. Now, what are these platforms that Cathie Wood said are evolving at the same time today? First is DNA sequencing, which is now called multi-mix sequencing since it is no longer solely focused on DNA sequencing but now includes RNA, proteins, and methylation. It's very complicated, but it's really exciting. We're going to be curing disease thanks to these breakthroughs. And in fact, we've already had one, a very important breakthrough just within the last week, said Wood. Another innovation Wood referred to is robotics. According to her, industrial robot costs are dropping precipitously. We have a labor shortage, innovation solves problems. The demand for robots is skyrocketing right now, Wood said. Energy storage is yet another innovation that Cathie Wood pointed to. According to her, consumer preference is shifting to innovation. Wood said that it is not just in response to the Russia-Ukraine war, which caused oil prices to go up, but also because these are now better cars that are more environmentally friendly. Another is artificial intelligence. The breakthroughs in AI today, I have to tell you, are mind-blowing even to us. Now, we are trying to look as far into the future as we can, and we are seeing breakthroughs that we expected in 5 or 10 years happening within 6 months and 1 year now, said Wood. The last evolving innovation that Cathie Wood talked about is the ChatGPT, a computer program launched by OpenAI in November 2022 and is built on top of OpenAI's GPT 3.5 family of large language models and is fine-tuned with both supervised and reinforced learning techniques. Among the 5 simultaneously evolving innovations today that Cathie Wood talked about, Tesla encompasses 3 of them: robotics, AI, and energy storage. Because of this, many, including Cathie Wood herself, are optimistic about the company's future. Analysts expect Tesla deliveries to grow about 40% in 2023, hitting 1.8 million to 1.9 million cars, up from roughly 1.3 million in 2022. Meeting 2023 delivery estimates will go a long way to convincing investors the 2023 earnings estimate is sound, and that Tesla stock might have sold off a little too much this past year. Although demand issues have left many Tesla investors worrying about the company's high valuation in the market, Wall Street is expecting Tesla delivery growth in the 35 to 40% range for 2023. For now, it may be too early to tell how 2023 will turn out for Tesla stock, but investors could only hope for a significant improvement from last year. Make sure to subscribe to Tesla stock for more.